Hi, this is Mike Wade and welcome to this video featuring Tom's Tools. Stock and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose, you know that. You also know I am not an advisor, and please don't construe anything I'm about to share with you as advice. All prices are in US dollars unless noted otherwise. Feel free to read the balance of the disclaimer by pausing the recording. Let's start with a question. Can an options volume spike be used to predict direction? Well, if you've ever watched CNBC and seen the Nigerian brothers talking about the options they're buying, they oftentimes look for spikes in volume on options and they'll go directional. So the answer is definitely. And really the idea is that when you see a volume spike in the calls, there's usually something going on with the stock where insiders have a suspicion that the stock's about to rise and they go out and buy calls. And they do so with higher enthusiasm than normal. And the same thing to the downside. If you see a spike in puts, then you can anticipate that the stock may drop. Does this always work? No. Does it work well enough for us to take this on as a system? Most definitely. So in this video, we're going to predict direction with option volume. We're going to be taking a look at the OI volume option ranker within Tom's Tools. We're going to use the option volume portion of the ranker to find directional candidates, and then we're going to be looking for directional option strategies to profit. I'll review that with you briefly so you can have a good idea about which option strategies are the best to use in this particular strategy. Let's hop into the tools right away and I'll show you how to do this. So first off, notice I'm back tested to January the 2nd, 2019, so I can demonstrate the power of this system. What you do is you go into options, rankers, option volume, OI volume PC ranker. That stands for open interest, option volume, and put call rankers. So all of these are different rankers within the tool. We're going to be looking for the plain and simple total option volume. All right, so I could look for total open interest. I could look for open interest spikes in puts. I can look for open interest spikes in calls. I can look for volume spikes in puts. I can look for volume spikes in calls. I can also take a look at the put call ratio. Oftentimes that's used to detect turning points in the market. So a very valuable and powerful scanner, but really what I'm focused on is option volume. Now I'm not going to skew it towards puts and calls. I'm going to look to see where I see the most volume and then I'll pick my direction from there. So the way you use the scanner, very simple one, as you can see here, is I'm going to go ahead and select the S&P 500. I've already got total option volume selected, and then I hit my search button. And then after the search comes back, you'll notice that we have the results here. So the first one on the top of the screen is net appliances. And you can see that we have the 5-day average total option volume. This is across the board for all options on NetApp. And you'll notice the latest volume is 793 times that, almost 800 times. So that's a huge volume spike. And you can see the absolute change and the current stock price. And you can see if you just go down the list, you can see there's many other companies that are also experiencing huge option volume spikes. Now, you can go into the option chain, you can pull up a chart, you can pull up the picture, which I'll do. And notice when I pull up the picture that I have my total volume shown, I have my call volume, and I have my put volume, and then I've got the moving average of volume here. So notice here that the skew is definitely towards the calls. So interest in NetApp volume is skewed wholeheartedly towards the calls. You can see here the call volume is off the charts almost, whereas the put volume is well below average. That certainly suggests that there's a lot of bullish interest in NetApp, and perhaps there's even some inside information going on or some anticipation going on that could actually come to fruition. So let's take a look at a chart. I can click the chart button and let's look at NetApp on, again, we're back tested to January the 2nd, 2019. And notice that NetApp here has had a bit of a bearish run, as did a lot of stocks in the last quarter of 2018. Bit of a bounce going on. It was right around 60, you can see here, when the call option volume really spiked up. Now, if I go into the earnings announcement, notice what happened to NetApp. It went from 60 when we got the signal to earnings all the way up to 68. So that's an 8-point run on a $60 stock, and that certainly is well over 10%. and that would certainly double your money in a 30-day trade. So that was an example of an option where the option volume was spiking in the call options. If you take a look at this one here on Norfolk Southern, you'll notice that the volume is skewed towards the puts in this case, suggesting that Norfolk Southern may have a downside in its future. So on this one, I would buy puts. And again, the reason is that the put volume is much higher than the call volume. The call volume is down here even below average. All right, so there you have it, a very straightforward system to go directional. Now the question you should have at this stage is, which option strategy should I use to profit? Now, first off, you don't know exactly how long you're going to be in the trade, so you need to think about that. You can use a longer term trade by out of the money 60 to 90 day calls or puts with a delta of absolute value 30 to 40. So that's your traditional out of the money calls and puts. You can use in the money shorter term options, 30 to 60 day calls and puts with a delta of around 70. Doing that will squeeze out a lot of the time value and reduce time value risk. And then lastly, you can increase probability by selling an at the money or even slightly out of the money 30-day credit spread with delta, in the area of 45, 50, somewhere in there, and profit as long as the stock does not go against you. And those three ways are really excellent ways to profit using this strategy. All right, so just in summary, using the OI Vol PC ranker, option interest volume put call ranker, you go after the S&P 500. You can use other stock list if you choose. Select total option volume, hit your search button, and then move through your list of candidates and find those with the highest skews of volume in calls or puts, and then go in that particular direction. All right, I hope you enjoyed this video, and I'll see you soon.